Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq. Joining me is Mirage Energy CEO Michael Ward to discuss the North American natural gas market. Michael, it's great to have you with us. Welcome to Trade Talks.
Great to be with you. Thanks for having me.
And it seems as if things have been a bit quiet in the natural gas market, with crude getting all the attention on COVID-19 demand tanking. Tell us about the North American natural gas market and where we are right now.
Currently, LNG prices are pretty stagnant as far as offtake demand due to the virus. The closest ready available market to the U.S. is to our southern border, which is Mexico. They're in dire need of natural gas, especially the very southern part of Mexico, down on the Yucatan. With our projects, we can get gas very cheaply to the Yucatan for consumers and industrials.
What trends are you watching now? Again, we know what's the impact from COVID-19, and how do U.S.-Mexico relations impact all this?
Fortunately, U.S. and Mexico relations are really pretty good, with all things taken into account, of course. We look at Mexico as a great opportunity for investment. Sure, you have political issues back and forth, as you do in every new administration, but those usually all get worked out after the first 12 months of the new administration being in office. Things are a little more dynamic now because of the virus, but we're really excited about it.
So you certainly think that there's potential there for the natural gas market as it relates specifically to Mexico. What are some of the risks to that outlook? However, it's no surprise that our administration is very dynamic, and that can certainly change day to day.
I think probably the most significant risk you have in the country, or in the part of the country that we're working in, is number one is security. The area that we're working in is a pretty violent part of Mexico as far as cartels and what have you. But we've learned if you work around their perimeters and kind of work with them, not particularly with them, but along their guidelines, you wind up getting along with them pretty good.
It's an interesting way of putting it. So now, Mirage Energy recently signed a $4 billion debt facility with the family office of Bluebell International for the development of pump lines, underground storage, and the Isthmus Corridor project. When these three projects are all completed, what will happen?
Well, it's really a three-part development. We've got an interconnect agreement on our pipeline, natural gas pipeline, with Whitewater Whistler, which is bringing Texas-produced gas to Agua Dulce Banquete, where we have the interconnect agreement there, and then we're building a new 42-inch line down to the southern Texas-Mexico border at Progreso. We'll have an international pipeline crossing by there at Progreso, cross 27 miles over into Mexico. We'll have a stub out that will go to our proposed natural gas storage facility, and a line that will go to Station 19, and then a parallel line that will go all the way to Los Ramones. We'll have a second piece that will come out of our storage, and we're going to do a rehabilitation on the San Fernando Cactus line, which is a 48-inch line that was originally developed to bring gas out of the southern production fields in Mexico, down out of the Bay of Campeche and so forth. That line was built to bring gas from the south to the north. it was never made bi-directional. So as it stands right now, you can't take gas from, say, Texas all the way down to the Yucatan without making that line bi-directional. Our project is going to be to rehabilitate that line, new compression, new metering, new SCADA, everything on that line, and redo all the meterings on all the tie-ins off that line that go to the various cities along that route. That's a 1,500 mile, 48-inch line.
So for the benefit of our audience, the U.S. natural gas market has shifted over the past number of years because we are now net exporters. Is that correct? And what does that mean for the natural gas market?
That's a good question. And yes, we are net exporters.
Mm-hmm.
Due to all of the unconventional plays, gas resources and oil resources have increased dramatically. We're now one of the largest producers in the world of energy. So with a readily available market that is close to the original source, the natural place to take it is to Mexico, and they have a desperate need for it because their production has been in a steady decline for years. So they have to import, I would say it's probably close to 85% of their molecules, whether it be crude oil, whether it be refined products, natural gas, whatever. With the administration's proposals on the table for new electrical generation facilities, they've got to have those molecules in order to generate electricity. So it's a win for Mexico, and it's a win for the U.S. because our energy producers in the U.S., if they don't have a place to go with those molecules, you see what the demand did during the Corona incident. Demand dried up, prices collapsed. If you've got a market to take that to and the demand's there, the prices will come back up, and it's a win-win for the energy producers. I've been in the business for 55 years since I was a little small kid. But if that dynamic will stay in place where you have an outlet that is readily available to take those molecules, whether it's crude or whether it is natural gas, it'll help both sides. It'll help the country of Mexico because they need the molecules. It'll help the U.S. Energy producers because they have some place to go with it. The other project that we have is down on the Isthmus corridor. It will allow us, we have structured deals for 900,000 barrels of tankage at the Port of Paritas, placed 2 monobuoys in the Gulf of Mexico. We have 4 docking berths for 500,000 barrel tankers in the Port of Paritas. That ties into an existing 30-inch and 48-inch line that cross the isthmus. Goes from the Gulf of Mexico, Port of Paritas to Salina Cruz on the Pacific Ocean side. On the Pacific Ocean side at Salina Cruz, we have 2 million barrels of storage, and we'll have 2 monobuoys. Now, what does that mean in the whole realm of things? Number one, you can bring ULVCs off the Texas coast and super tankers. And super tankers can't go through the Panama Canal. So you can bring super tankers to the monobuoys, offload them, and cross the isthmus into the Pacific side and load them, either put them in storage, put it in storage, or offload them into super tankers on the Pacific side. That saves you 36 days in true shipping time, because without that, they have to go all the way around the Horn, all the way around South America to go to Asia. So
Yeah.
that's the nuts and bolts of that deal. It's a great economic benefit and gives the U.S. and Mexico, well, all Northern Hemisphere, security and the availability to move petroleum products on a safe route. So, there's a
Yeah.
lot of political things happening on the Panama Canal. So
There certainly are, but it's really interesting to learn how the infrastructure of the natural gas complex works. Michael, thank you so much for joining us on Trade Talks.
thank you.
And thanks for joining me. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.